All right.
Hey, hey, hey.
Hey, how's it going?
Patricia. Hey, Lane. How are you guys?
Good. How are you
Very
today,
good.
John?
Still number one, still on the run, still in a bad need of a haircut. I can't wait for this to all get better and for many reasons, but a haircut is an important one too.
Yeah, I can't wait to get a haircut as well.
I don't know if you've seen photos of him back in high school when we started dating, but he had hair down to here.
It's down pretty
So
long.
I'm going to see if we can just bring that look back. So
There you go. That's a good one, Lane.
I can do it again.
thanks for jumping on again here with us
Yes.
this week,
Now,
John, for our weekly market and mortgage update. I'm Patricia Zars with Z&R Realty, and my husband,
Lane
broker
Rogers.
Lane Rogers with Z&R Realty, and John Hudson with Mortgage Financial Services, coming to you every single Tuesday with your weekly update on the real estate market and mortgage updates.
that's
So,
right.
John, let's just jump right in. What are some of the things you've seen over the last week since we were live going over all this last week?
Well, the market is still very fluid. That's the best way that I could describe what's happening in the mortgage world is fluid. I think probably one of the biggest things that we're definitely seeing on our end of the business is still what we talked about last week was a lot of consumers confused about what the whole mortgage forbearance issue is, right? You still get talking heads on TV saying, oh, yes, you could just go and skip 6 mortgage payments. But unfortunately, the reality is it doesn't really work that way. It's definitely a lot more complicated. And what's happening right now is when a consumer makes a payment or to a mortgage servicer, right? The people that send them a monthly coupon or statement every month. When they make a payment to them, that mortgage servicer still has to make payments to the owner of the actual mortgage note or the bondholders or investors that are in the secondary market. So if a consumer quits making that payment, well, the mortgage servicer is still required to have payments going out. And so the big concern that we have in the mortgage industry right now is that obviously if there's not cash coming in, but the servicer still has to have cash going out, eventually that cash is going to dry up. I mean, right? I mean, you can only give out so many dollars without having any come in. And so the concern there is that, well, if that forces a servicer into default or they run out of cash, then what happens? And then I think you really run into this, what we saw back in the housing crisis of 10 years ago, where, ultimately the consumer is harmed because there's mass confusion, right? Nobody really knows what's going on. So that's what's happening right now. And there's a lot more consumers inquiring about the forbearance than really what the regulators or Congress thought. For some reason, they didn't think that when they told people they could skip payments that they wouldn't come back and ask about that.
Yeah.
So good news is Ginnie Mae, which is the ultimate insurer of government loans, so FHA, VA, USDA mortgages, has come in and saying that they're going to help, in layman terms, basically facilitate a line of credit for these servicers to continue to be able to make their payments when they don't have cash coming in. And right now the industry is still, really concerned because we're still waiting on Fannie Mae and Freddie Mac, regulator, the FHFA, to come in and do the same. And again, it's unfortunate that, millions of lives are being impacted and possibly being hung up over some over the politics of it all. But I think at the end of the day, we'll get to where we need to be, so that way everything can get back together. The hard part is, how does that impact consumers? And right now, the one thing that investors don't like is uncertainty, right? I mean, think about what do we do in the mortgage business? We essentially manage risk at the end of the day. We're going to give you, borrower, X amount of dollars so you could buy a house, but we're going to estimate what the chances are that you might default are based on your overall profile, your credit score, your loan to value, your debt to income ratios. So the higher, chance that you have of default, the higher that you're going to pay in interest or in fees up front or anything else. It's basically the higher risk you are, the more expensive you are, or the more expensive your mortgage is going to be. Well, in a case here where you just have flat out uncertainty, nobody even wants to come in and price out the risk. And so what we're seeing, and that's a great segue into a story that came out in the press just the last couple of days about what Chase Bank is doing. Right. Which Chase Bank has come out and said that they're going to basically tighten up and do mortgages for 700 credit score borrowers with putting 20% down on a house. Well, trust me, I wish that every consumer in America had 20% to put down and 700 credit scores. The reality is that's just not the credit profile for the average consumer that's in this country. And so, will more people follow suit? You might see that, but I think ultimately that should be a bigger picture for our folks in government that's saying, well, because because of the things that you've said or put in place, that the private market that's lending money out is constricting and then ultimately making it harder for consumers, potentially harder for consumers to buy a house. Now, the good news is we're not that bank. And the majority of lenders out there are not that bank. So, please, I hope people don't misconstrue that as, oh my God, I have to have 20% down and I have to have 700 credit score.
Well, I think that's what we see initially because we see the posts on social media and things like that. And I think a lot of the consumers out there instantly are going to think, well, shoot, I can't buy a house if I don't have 700 or if I don't have 20% down. And that's just simply not the case.
Yeah, that's a perception, going back to all that misinformation out there right now.
Yes, that's hashtag fake news.
Yeah.
So that's just one lender out of thousands of lenders throughout this country that has taken a much more conservative stance. But I think it ultimately plays into the bigger picture, which is we need to get clarity or certainty back into the marketplace, so that way people can effectively calculate risk, which means looser guidelines or lower credit requirements or better terms for consumers trying to buy a house. So I hope people don't take that as gospel and think that, oh my God, I'm just going to quit buying a house now because I don't have 20% put down. That's not true. We're still seeing people doing down payment assistance loans where they're getting a grant from the government, from the state government, for their down payment. So in essence, they're buying a house with nothing out of pocket with a 620 credit score. So there's still a lot of access to credit for consumers, but the longer that it takes for the government to give us clarity and to help facilitate a smoother process for this forbearance issue, then the more confusion that you're going to see out there for consumers ultimately.
Right. Yeah, and I think like you just mentioned, the down payment assistance programs. That's another thing over the last few weeks we've seen a lot of different posts about, in reference to them being gone or going away.
Phasing out.
And while obviously there's been some changes in everything mortgage related, there's still down payment assistance programs out there.
Right.
There's still programs with, credit scores below 700 and quite a bit below 700, and there's low down payment. There's so many different things that are still making it a really good time to buy. I mean, interest rates are where right now, John? Low threes.
Oh my God. I mean, they're still super low. I mean, yesterday I had loan officers quoting, 3.125 out there to consumers. So, rates are still extremely low, but again, it all depends on credit profile too. So there is no one size fits all. And that's why I cringe sometimes when I see just, blanket statements about what rates are out there, because there's so many factors that come into play, which, again, is why I'm going to come back to, and that's why it's important for consumers to talk to local mortgage professionals that will sit down with that consumer and virtually sit down, right? In the age of social distancing, but virtually sit down with the consumer and walk through all of their options, because we see it too, where consumers come in and thinking, oh well, I want to use this program. My buddy got this loan program, and this is what I want to do. Well, then you ask enough questions, and there might be another product that better suits their needs. So again, that's why it's just important to use that local mortgage professional, not some big box call center that's just cranking out units. That's just looking at you as a consumer, as a number, not as a family that's trying to be part of their mortgage plan. But ultimately, yeah, I mean, rates are still super low, and if I had to put on my crystal ball, I think I don't foresee anything that's going to make mortgage rates spike up anytime in the near future. There's so many things that are happening in the economy right now that are ultimately not good. I mean, there's millions of Americans right now, or there's millions of people around the globe, obviously, that are being impacted by this COVID-19. But right now in America, our economy is definitely not as strong as it used to be because of because of the way that things have worked out. So until this economy is firing up again, rates are going to remain low, and that means that there's going to be great opportunities for people to refinance, which I would if they're thinking about the forbearance issue, consider a refinance, because they could potentially skip up to two payments with a refinance, or even buying a house, because gosh, I mean, now rates are low. You can still get down payment assistance or low down payment options. If you're just tired of being with your family in a 600 square foot apartment, again, people are still buying homes out there, and if you're going to be a shelter in place, it's probably better to do it in your house with your backyard and your pool than stuck in that apartment. So yeah, I mean, right now it's an amazing time to explore your options, if you will. But let me kind of throw this back at you a little bit, Patricia. Let me play the reporter. I want to hear from you as if I'm a borrower, if I'm a consumer, and let's say I am in my 600 square foot box with my family, and my kids are just driving me nuts. I need a bigger space, right? How do I go about doing that if I'm really not supposed to be leaving my house right now? So I know you guys have some tools. How would I do that?
Well, I think it's important to look at a few different things with that. And, I know when all of the stay home, work safe ordinance, shelter in place, whatever you want to call it, started happening several weeks ago. I've lost track of time. It might have been even a month or so ago now, but, there was a lot of question as to where real estate agents and affiliate partners and everyone involved in the real estate transaction fell into that quote unquote being essential, and it's without a doubt, the housing industry is going to be one of the biggest factors that helps get us out of wherever we end up with this economic downturn. Mm-hmm. So it's in a sense our obligation in the real estate industry and in the housing industry to continue to do the things that we can do, with taking the right precautions and stuff to continue to have the housing market function on a good basis, but also to as quickly as possible rebound and start taking advantage of pent-up demand and things like that when the time is right. So
yeah, I mean, there's a lot of people out there that simply can't afford to put their housing needs on pause right now for whatever reason. It could be a divorce, it could be any type of family situation where it's mandatory that they, make a real estate. So.
Yeah, and I think it's important to go, okay, so yes, the housing industry as a whole is essential, and it's more essential now than ever to help us get out of the economic downturn and the slump that we're going to find ourselves in. And whether or not they're using, officially the term recession yet, because we haven't fully been, 2 quarters, in, we're in a recession. We're going into a recession, it is what it is. And I think the more we can go, okay, let's lay out what the facts are. Let's really take a look at it, and let's go, keep in mind that a recession does not equal a housing crisis. And we're not in a housing crisis. And if you look back, we were listening to a podcast that came out on Friday with Tom Ferry and Steve Harney of Keeping Current Matters. Yeah, Keeping Current Matters. And they kept talking about, how 4 out of the 5 last recessions, if you look back over the years, you didn't see a drop in housing prices. It didn't affect the housing prices to the point where they went down. And I think that with what happened with the actual housing crisis in 2008, that it just left a really bad taste in people's mouth, and they're very scared of that being what we're going into. So when you talk about tools and systems and efficiencies that we can use, to continue the process of buying a house, there's a ton of that out there. And, agents are able to start their initial consultation and have a virtual consultation with the buyer, go over their needs and wants.
So okay, let me stop you real quick. So what is a virtual? What did you just say there?
Like a virtual buyer consultation.
Okay, so what is that? What does that entail?
Well, similar to us having
what we're doing right now,
this virtual meeting that we're having, it's using tools and platforms like Zoom or even FaceTime to have the conversations that an agent would have with their potential client, their buyer, about the process.
Yeah, face to face, but not in person.
Yeah, online, face to face.
Yep.
And I think it's important to have those conversations, that an agent should be using those kinds of tools. In addition to phone call, obviously there's the phone. You can always talk to somebody on the phone. You can always text. But I think when you're going over something as important as the home buying process and going through this with a potential client, agents need to have face-to-face. And I think the more that you're able to have those face-to-face meetings, even if it's through a platform that's online, the level of communication is very different than just a phone call or a text.
Absolutely.
And so I think that's crucial to start the process. If you can't do it in person, which right now it's, even deemed essential, and the fact that you are, here, at least I know in San Antonio and Bexar County, it's different all across the country. We're able to have face-to-face appointments in person if we choose to. Obviously there's risk associated with that, and obviously there are other ways to do it. So I think it's just important to go, how can we be efficient? How can we stay safe? And how can we accomplish what we want to, out of the conversation that we're going to have?
Yeah, there's definitely ways to get a transaction closed at the same time, maintaining those social distance protocols.
Yeah. So if I'm just, stuck in my apartment and I'm thinking about buying a house, I mean, if I just go online, oh my God, I'm going to get lost, right? Because I don't even know what I'm looking for or looking at. So I can absolutely see why having that face-to-face consultation with a real estate professional, a licensed real estate professional, is so important for you to ask me what my needs and wants are. Do I have special needs that need to be accommodated to, right? Or I really want that. I want a house with a big bathtub in it. There's so many things. I have 5 kids that'll that eat everything. I need a giant kitchen. I mean, those are things that are important. That I think if borrowers or consumers just go and flip through their phone, they might get lost, right?
Right.
So
Right. Well, and there's always been the ability for buyers to search online, or for a long time there has been. And you've got big national sites, your big sites where you can search properties online. And then, agents typically will also have their own sites, sometimes updated a little more quickly than some of your national sites. I know all of our agents at DNR Realty, their websites and their IDX feed, their Internet Data Exchange feed, is as close to real time as you can get with the properties that are currently on the market in our area. And so their buyers can use that as their search tool. They can let the agent know when they see something they like, and there's just that constant communication. And then I think what's key is finding different ways for the agent and the buyer to together eliminate properties that don't fit what they want. And
Right.
first having that buyer, the checklist, the what's important, what are the must-haves, what are the wants, what are the, you go through that, and it's a checklist. And I think each agent needs to have that with their buyers. And as you go through the properties, they mark off what it has, what it doesn't have. And it's more crucial now than ever to go through the process of elimination before you schedule any kind of tour on a property. And to eliminate the ones, and you can drive by the property, a potential buyer can go drive by, they can check the neighborhood out, they can see if they like it, because there's no reason for anyone to get out to go tour a property and then find out once they get there that they don't like something about it that they could have figured out before they scheduled an appointment.
Yes, eliminate it, actually schedule that appointment. Sure, there's a ton of stuff you can be doing right now to really rule out certain houses, before, or certain neighborhoods, even before you even actually walk in the door of the house. So.
Yeah, I think before you set an appointment with a seller on their property, which you still can do, I think it's important to have taken the necessary steps, the buyer and the agent together, to do any kind of extensive photography, go through, look at the photos extensively, find some way if there's any kind of virtual tour or 3D or floor plans, that kind of stuff. And then a video walkthrough. I know a lot of agents that are doing that for their clients prior to the clients going to see the home. They'll go do a preview by themselves solely and go look at the property, send a video. I think going through those steps.
Yeah, the virtual tours are pretty cool now, with the Matterport and everything. I mean, it's almost better than walking through it, yourself in person. So pretty cool.
No, that is awesome. So I would think, given the circumstances that we're all in right now, I mean, if I'm a buyer, I probably have a little bit more negotiating power than I would, prior to this. Is that accurate?
It all depends. It all depends. We're seeing a little bit less as far as inventory right now, but there's still a good amount of buyers out there, and definitely a lot of less tire kickers, less showings. But the buyers that are out there, they seem to be very serious and very little looky-loos, less tire kickers. And
right.
So, the buyers are in a situation where they have low interest rates and they can still get a pretty decent deal on a house. And the sellers are able to get their home sold right now just because there are a little bit less buyers. So it's actually kind of a win-win thing for everybody.
Man, that's awesome. I mean, that just tells me that again, even in a difficult time that we're in for our nation, it's still, there's still amazing opportunity out there for consumers that have the ability. So no, that's awesome.
And I think, a little bit of a slowdown really just kind of goes back to what we were talking about earlier with just the fear in the market, the uncertainty of, when this whole thing is going to be over with. And so I was kind of doing a little research, and then, I was looking at, who do we go to when we have fear and we're kind of worried about where things are going. And if you look at the people that have been a reliable source of providing information, on the economy over the years, sources like JP Morgan, Morgan Stanley and Goldman Sachs, I mean, they're all pretty much in alignment right now with what they're seeing as far as when we're going to come out of this, and what they're seeing as far as how we're going to come out of this. And they're all looking at that, that V-shaped growth curve that we're going to come out of it with, sometime probably third quarter, maybe beginning of fourth quarter. So if that kind of eases people's pain out or fear out there a little bit of, what's actually going on in the market and when it's all going to be over with, I think we'll see more buyers come back to the market, more sellers.
Yeah, they're predicting the V, and I've seen people asking on Facebook, do you think it's going to be a V or a U and kind of a gradual? They're all predicting it to be a V, meaning sharp decline, which we're in the process of right now, and it's to be expected. I think the more we can go, okay, eliminate the confusion by providing the good information that comes from trusted, knowledgeable sources. So eliminate the confusion, because confusion leads to fear, and then fear is what leads to panic. And we're in that. We're right in the middle of that somewhere because of all the misinformation out there. But as quickly as we're going down, they're predicting we're going to go back up just as quickly.
And these guys have like trillions of dollars under management, so you can imagine, their opinion matters a lot. They have a lot on the line, so I guess you can actually kind of put some credence in,
No, that is definitely good news, and and I will say, like I said, before, I mean, we're going to be in a low interest rate environment for a very long time. So again, that's opportunity for consumers to take advantage of. I guess we're coming up on our time, but I'll just kind of close out and just say it again. We will get through this. We all have to keep the faith. And remember that faith doesn't mean that it's going to be easy. It just means that you're going to get through it. So yeah, there's plenty of opportunity for folks out there right now. Again, I'll just stress, be careful what you see on the internet. And
the news, I think everywhere, yes.
Yeah, I mean, I would just quit watching. I actually quit watching the news. I don't even pay attention to it anymore. And then again, if you're for your real estate or your mortgage needs, definitely talk to that local professional that not only can really guide you and hold your hand, but actually has a vested interest in your community, because they are your neighbor.
Yep, absolutely. I think the more we can realize as an industry as a whole, that we play a really big part in this and helping the entire world and economy, help it all get back on track. We've got to all stick it out, and we've got to all keep moving forward, because that's what's going to help get us out of this a lot more quickly than if we just succumb to fear and panic. Yeah,
I think as real estate professionals, we all have more influence over the housing market than probably anybody else out there. So it's really our job it's going to be our job to get this thing back on course.
Yeah, and I'll finish with last thing that Steve Harney said too on that podcast with KCM, Keeping Current Matters, and he said, buckle up. It's going to be a wild ride down, but it's going to be a really exhilarating ride back up.
Absolutely. I love it.
All right, John, thanks for jumping on here with us today.
All right, guys, y'all have a great week. Y'all know how to find me if you need anything. And I just tell you, keep the faith.
Has any mortgage questions, has any real estate questions, we are all collectively here to help you guys.
Got you covered.
Tune in next week, Tuesday, 2 p.m. And we hope y'all stay safe this week, and we'll see y'all soon.
Bye, guys.
Right.
Bye.
Bye, guys.
Bye.